So here we want to look at how some of the international markets have shifted, and obviously it's going to come back to Russia, how things have changed with Russia. And I thought this was a good chart looking at how more Middle Eastern crudes are heading to Northwest Europe. And again, not surprising. So when you look at Netherlands, Poland, Lithuania, they have to try to replace a lot of this piped crude as well as what normally comes in off of the boat. So it's going to remain elevated. This is going to be some of those different shifts, because when Asia looks at, all right, I can buy more expensive Middle Eastern crude, or I can buy discounted Russian barrels. Well, they're going to buy discounted Russian barrels, but it's going to have more miles per ton. And then when you look at Northwest Europe, they're like, well, we can't buy Russia, so we're going to buy more Middle Eastern crude, but again, increases miles per ton. So just the length of time boats are going to be absorbed, you're going to see some of these different increases as we go through the remainder of the year. And as you know, depending on how some of these different sanctions bite, where do they bite, that's also going to be the case. But it's not enough, which is why when you look at U.S. crude exports to Europe continue to climb to almost 50 million barrels, and that's monthly volume, not by day, obviously. But this is why when we say that we expect to maintain a very elevated amount of crude into the international market, this is one of those key pieces, being about that 3.5 million barrels a day. A large part of that will be going into the European theater. And as you have increases in cracks, the cost of cracking heavy sour versus light sweet, again, making things from the U.S. more optimal just in terms of cost, that's going to continue to be some of those different bright spots. Now, when you start looking at the pipeline system, I thought this was a really good chart highlighting why we're getting some of these shifts. 6 European refiners depend on crude delivered through the Druzbha system for all or part of their feedstock. So how do you replace that? You know, you have to replace what's coming off the water and down into those markets, which again is why we expect to see, a fairly elevated amount of crude coming into these markets to try to replace what is coming in naturally off the water in terms of the Baltics, what's coming by boat from Russia into the U.S., into Europe, but then at the same time what's coming from Russia on pipe into Europe, and how much of that can be replaced. So then when you start looking at the exports in general, you can see that West Africa is starting to creep a little bit higher in terms of exports back into China and Asia in general. But I think this is really important because I know everybody likes to talk about OPEC plus production. And, there's no production, production's falling down. But why am I going to produce if this is what things look like? My largest growth buyer, my largest buyer of the last 5 years, is dwindling, and now they're getting discounted crude from Russia. Russia has to sell because they don't want to shut anything in. So what am I going to do? Am I just going to leave it in floating storage? Am I going to produce and just hope for the best? Or am I going to try to shave things back? Now, it's increased a bit, but you can see that even 2021, which was a slow year, it's even slower than that right now, which again continues to be some of the issues. Asia floating storage, had that drop, but you can see it's more seasonal, and we do expect to see this remain, as we've been saying, flat. Obviously it's going to go up and down just based on timing, but it's going to be fairly stable as we go through the remainder of the year, as those ships show up. You have the transit going from transit to floating storage, and this is going to be the case. Now, when you look at West Africa has tried to increase some of their pricing, trying to get a bit better pricing given where things are. And essentially customers have said, nope. And you've seen a huge surge of floating storage again in West Africa. So looking at West Africa right now, again, why am I producing more if I have all of this crude sitting there waiting to be sold? I'd rather sell as much as I can. We've seen some of those increases in May and so far in June, but the question is going to be, okay, well, does that mean we're going to see a big increase in imports, or when do we see this drop? And this is going to be, I think, a key leading indicator. They're going to want to get this well below, back down to the average of 2 million, not sitting at over 11 million. before we start to see more of a production bump. And that's when you start looking at OPEC crude exports in general. You can see things have come down, but there's been a marked step up in floating storage. So yes, exports have come in, but you're also getting discounted barrels from Venezuela, from Iran, from Russia. So when you're looking at this, it's like, well, Russia should be a part of this. So you're going to see a little bit of this increase. But as we've been saying, we expect this to be fairly stable, if not creeping up a bit. The biggest issue is West Africa, because a large part of this drop is the West African piece, because you've seen some stable flows from other areas. We did get a drop out of the Middle East because they did gun those prices. On the OSP side, they have since reversed those price increases. Still high, not saying they're not expensive, but they did drop that, which should turn this and move it a bit higher on the export front. So then when you look at China's super tankers, this is something that we've been talking about. These are tanks that are signaling China. So there's, again, more than enough crude floating in storage. There's more on the way. So now this is where they're trying to resell. They're trying to do different things. It's still elevated when you look at that time of year. But again, this is something where we think it'll be on the higher end, just given the length of time. So now there's just going to be more boats coming from further away signaling China, which is going to keep this a bit elevated. But at the same time, you have China Shandong independent refiners coming back. As we get some of this roll down in refining, in lockdowns, you're starting to see this pick back up. You can get crude in, you can get cruise in, but there's a lot of refined product sitting in storage. So now you're actually starting to see some of this come to market. You're starting to see some of the softness coming in, which is what is appearing in Fujairah, because Fujairah is being impacted by what is being sold coming out of China. Crude on total on the water still elevated. Again, this is a mixture of again, a lot of crude in transit, a lot of crude in floating storage, going to remain at that higher end, obviously well below 2020, but you can see that it's well above where we were in 2021. And the crude in transit is one of the big drivers of that, as we continue to have more crude in transit, and we expect this to remain elevated as Russia tries to push more through and more crude comes into the market at this point. Crude and floating storage, you can see that we're still elevated. We're going to stay elevated, and we expect this to take out the 2020, 2021 highs, the 2016 highs, for those that remember the big builds that we saw in the Middle East in 16. And again, it's just, we don't see a huge surge up or a big drop down. It's just floating storage is going to remain on the elevated front. Now, crude and product exports from the U.S., gasoline had a small drop of 183,000 a day, still 286,000 above the 5-year average. A lot of that going into Mexico and Latin America. Distillate had an increase of 122,000 barrels a day. It's still just below the 5-year average. So realistically, when we look at this, we expect gasoline to follow the 5-year. We expect distillate to be just below the 5-year, but still remain, seasonally normal, if you will, for the most part, just slightly above or below that 5-year. Propane had a big bounce back, increase of 328,000 barrels a day. 585,000 above the 5-year average. That's still going to remain strong. And then crude exports had a big surge, went from 3.52 to 4.34 million. A lot of that is residual. Again, when was it filed? When were all these things done? And I think that's going to be the key piece, because then you'll get a drop. So that's why we always talk about that 4-week rolling average. Gasoline exports, as we've been saying, we expect it to remain above the 5-year average, just because we will get more flowing down into the Latin American markets and remaining above the 5-year, but within the top of the cloud and remaining in that seasonal range. Where here you can see crude oil exports, again, surging higher. So then when you start looking at distillate had an increase, but it's still following just below that 5-year average, and that's where we expect it to stay. Now, when we look at ethane broke to new all-time 2022 highs. And this should stay strong as well, just because you have China coming back from some of the lockdowns. They'll start to pull more ethane, which will be bullish for the U.S. markets. Now we can talk about where the big surge in crude oil exports. But when you look at where we are, we're bouncing between about that 3.4 and 3.6 million barrel a day level. And again, that's where we're saying 3.4 to 3.5 is, I think, where we're going to be in that sweet spot for those exports into the international market. Propane, LPG, record high, again, new record for 2022. And we just expect this to be either in the top, well above the 5-year average, either new all-time seasonally adjusted highs, or again, the top of that cloud. Now, when you look at the swap between Dubai and Brent, you can see that we're just above $10 again. So it's again becoming expensive from the dated Brent side. That's going to pull a bit more of that Middle Eastern crude, especially with the reduced OSPs, which make them a bit more competitive given where dated Brent sits at this point. You can see that refinery margins have come down in Singapore, still very high, but again, the cost continues to be a problem. And just where is the availability of crude? What kind of crude is being used? So some of that continues to be some of those pieces, but hydrocracking leads the way because of that distillate cut, which is where it's pulled back, but still is going to support the rest of the crack, the rest of the runs that we expect to continue to come through. Now, when we look at loading schedules, here you can see that Russia is in May said that they were at 4.45 million barrels a day. But then when you look, there were about 3.6 million barrels a day. So there's still some of that is sitting in storage that you're going to try to push out. We expect Russia to remain well above the norms. And then Nigeria, Angola continuing to be fairly flat. And when you look at Norway, we're going to have, maintaining about that 1.4 to 1.5. And then Libya has had some things normalize a bit, and again, maintaining over that million. So when you look at Nigeria, they dropped the QEBO OSP dropped from $2.11 from $2.43 in May, which was the highest since January 2020. And then when you look at the OSP for Bonnie Light, they cut against the dated Brent from to $1.66 from $1.94. But again, they spiked it. They're trying to see how much demand they are. And then as normal, as we've been saying, as we go through through the middle of June, whatever's left, they'll try to cut those prices to move some of these pieces, especially given where some of the prices are in general and where floating storage sits. At the same time, Euro still remain wide at about $35 to $36 off dated Brent. Not much has crossed, and that's something that we're going to continue to watch in general. As we said before, Genscape, when we're looking at Europe, we're back to the highs of 2022. We're above where we were in 2021, and we expect to remain, I think, fairly stable in this level in general. And then when you, again, but it's just going to be a matter of timing. When you look at gasoline, there was a big drop of 342. When you look at gas oil, a small drop of 31. And you can see here, gas oil continues to be in a very bullish spot. Again, gas oil, distillate, diesel, right in that same wheelhouse, that continues to be in a very bullish spot for pricing, which is going to attract more imports from Asia as well as from the Middle East. Now, when we look at gasoline, you can see that there was that big drop, but it's still above average. So when you look at where we are, we had record levels. Then there was a sweep to try to get as much of this out, try to balance storage, just because they are running more light sweet. They are going to create more gasoline and needed to make a bit more room at this point in time. So then when you start looking at fuel oil, in general, the fuel oil market is fairly stable, and we don't see that changing. Some of it will be exports, some of it will be recracked, and we don't see too many movements in Europe. Now, when we look at Singapore, you can see that there was a small build. You had light distillates drop. A lot of that is, again, being exported. Middle distillates flat. We expect it to remain flat as you start to get a little bit of a pivot higher, just as there's talk about more exports coming from China. And then the residual fuel had a sizable build, but a lot of that is just going to be some of those different pieces. We expect a steady grind higher to about 41 million barrels of storage, and that's just some of the pivots that we're seeing with China starting to talk about and starting to export a little bit more product. That's going to push a bit more into storage, but still stay fairly average over the last 15 years. Light distillate, as we've been saying, well above average, where we expect it to remain in this range as we do get some more slowdowns on the gasoline front and we get a bit more volume coming into market. On the other hand, here you can see that middle distillate seasonally adjusted near or at all-time lows over the last 15 years. We don't see much improvement. You can see that there's typically a little bit of an increase as we go through. So again, even if we get a little bit of an increase, it's not changing the situation, and that's where we're going to continue to see a lot of pricing. And then when you look at residual, here you had a little bit of a bump. We expect to see this a small grind back up and just sitting at that 15-year average. Fujairah had some sizable builds. There was an increase of about 2.059 million, the first time they have breached 19 million barrels since late February, and there was a build across all three. So light distillates rose by 907,000. East of Suez gasoline market was seeing some downward pressure amid expectations that Chinese exports may increase moving forward. A market source said, I believe that gasoline cracks have narrowed significantly recently as the market is expecting a new gasoline export quota that may be as high as 3.5 million tons. And you're starting to see guys wait a bit, saying like, okay, well, I have some in local storage. Let's see what China comes out with. But you have the end of Ramadan. You have some of these different shifts, which again is going to keep light distillate a bit elevated. Middle distillate had an increase of 592,000 barrels. Gas oil market was finding some headwinds from easing supply tightness, pressuring the complex as demand continues to recover across the region. But you do have some new supply. So it's going to be important to look at where are some of the supplies. So Saudi Aramco's Jazan refiner has been talked about. They've begun export operations for oil products, and expectations for Kuwait's Al-Zahar, a refiner, to start up during the second half of the year. Kuwait's new refiner will be online soon. Heard their new refiner will be online in June or July. So again, that'll put a bit more middle distillate because they are going to be targeting that middle cut. Stocks of heavy resid rose by 560,000 barrels on the week to 10.902 million. So again, offers for delivered marine gas oil, marine fuel oil, again, fairly stable, and we don't see too much movement up or down. Time spreads have recovered. They're at $2.86 for July, August when we're looking at Brent. So again, you're seeing that tightness here. We do expect some pressure to the downside, but just given where the market is right now, we expect this to still stay well above 250. Now, when we start looking at floating crude, you can see that there's North Sea's fairly flat. We expect it to not move up or down all that much given where prices are right now. Middle East, you can see it's elevated versus where we have been historically. Normally get a bit of a dip. Instead, as we've been saying, because of pricing, we're going to stay elevated. And then as we get into June, we should see a bit more movement, which will drop this down a bit instead of being towards the higher end of that curve. Timing delays. Last week, we had a drop in onshore storage. We had an increase in floating. That has now flipped. We expect this to continue to be right around that bottom end of the curve, as we've been saying. So that's what we have for you today. Hopefully this was helpful. If you have any questions, please let us know either in a comment section on Twitter. We're always happy for a good back and forth. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.